Hey, world, being Willie, come back with another live. I'm hoping I'm not buffering. I'm looking at the screen right now. It looks kind of tricky. I'm not gonna be on long live tonight, family. I just want to come back with a quick video. Like I said, make sure you like, share, and subscribe. And I will be coming live every weekday, Monday through Friday. I'm coming back live tonight for a little bit because I wanted to kind of go into a little information about what's going on and to kind of give a little bit more information about why I feel the stock market and this particular economy is going to crash. We talked about yesterday how the bond market is inverted. It's an inverted curve, and that's one indication. All right. Today, I want to talk about something that's been happening in the news, and kind of want to make you aware of it. KY in the garden. AZ, what it do? Okay. Today, I want to talk about China devaluing its currency, and what does that mean, and how you will kind of get an idea that it's all a game. Okay, we talked yesterday that the game is the game, and how you can actually have an opportunity to be to change your financial situation is by kind of being conscious of what's going on geopolitically. And this whole trade war with China, family, is a facade. Okay, I mean, if you look, Ty World in the house, if you look at everything that's pretty much made here in America is made where in China. Nephew, there you go. Who, me? I see you. All right. Everything made in China. The camera I'm using to go on this live is made in China, right? And so your intelligence should tell you, wait a minute, how are we having a trade war with China when everything is made in China? Okay. How's it a trade war with China when we don't manufacture anything? Everything that we pretty much consume or buy is from China or overseas. And so when Trump says there is a discrepancy with the trade value, yes, but it's not by accident. How can you even the trade when we don't produce anything here? We're the number one consumers. Why do you think that this economy right now is propped up on CPI, which is a consumer price index? That's basically taking the calculations of how much consumers spend their money, okay? And if people are not buying stuff, okay, that's an indication that companies and inventories are growing, or what are they doing? It's basically taking that stuff overseas. And so it's not really a fair indication of how the economy is doing. And so when you hear Trump say this is a great economy, yes, this is the biggest boom market we've had in many, many years. I mean, that's just by, common sense. I mean, if the Dow was 15,000 points years ago and it's 26,000 points now, it's the highest it's ever been. You did? But let's not look at that as the only indication that this is a great economy. And when they say in unemployment rates, that is not indicative of a good economy. Okay, we talked about the yield curve yesterday. Remember, the 2-year and the 5-year is inverted. That's not a good thing. And just to reiterate on that, you're not going to put your money in an account that's giving you less interest for a longer period of time, if that makes sense. You're going to put your money in an account that's giving you the most interest. And right now, that curve is inverted, and that's not a good thing. That's one of the top indications that an economy is in distress. Now, the irony of it, family, is this. The Federal Reserve is the what they call the Wizard of Oz. He's the cat behind the curtain, manipulating the market to make sure whether through what they call a QE, which is quantitative easing, or QT, which is quantitative tightening. And what does that mean? All that means is the Federal Reserve buy and sell treasury notes or treasury bonds to manipulate the market or to manipulate the bond market. And so China is doing the same thing now with their money. That's why if you look at the title, it says China devaluing its currency. And what does that mean? Well, AZ, I'm going to have to agree with you, buddy, and I'm going to go into it. AZ says devaluation means our spending power is reduced. Okay, that's because the dollar amount is not worth $1 anymore. It's probably worth 80 cents. And what China is doing, when they devalue their currency, which is the yuan, well, product that's normally selling for $1 in China Now it's only selling for 50 cents, right? And so American companies that are sending their product over there to be sold, i.e. soybeans or whatever it is, they're not getting a fair value. So China's manipulating the market. You did? Dion, there you go. What it do? Glad you're in the house, brother. All right. So that's basically what it is, fam. So all this kind of information, it's just information to just kind of keep in context. So you know paying yourself first is going to really benefit you in the long run. You dig? So we got the yield curve that's thrown right now. We have China, which is devaluing their yuan. And of course, the United States is having a trade war with Mexico and Canada with this USMCA, the United States Mexican Canada Agreement, right? And then the last thing, family, these interest rates are too low. They're too low. And who does interest rates affect the most? People that's trying to make it. If it's low interest rates, that means banks ain't giving a lot of money for you to keep their money there. Or if it's low interest rates, you're having a hard time trying to build wealth. But guess what? Rich people can build a lot of wealth with low interest rates. How? Because you're a multimillionaire. It's nothing for you to go get a couple of $1 million loan and go buy more assets. You did? And that's why I talked to you the other day about the difference between good debt and bad debt. Okay? So China's devaluing their yuan. The U.S. dollar is going to probably be devalued. Think about this, family, how it's such a manipulation of the mind. The money is a fiat system. There's nothing that backs it up. We're not on a gold standard. So this money, this paper that the Federal Reserve is just creating out of thin air, they only getting it because they're able to charge interest on it. Think about how pension plans. Remember back in 2008 when a lot of people lost a lot of money in their pension plans? And they saying that right now there are a lot of pensions that may be affected by this next big crash. And you may ask yourself, well, how is that possible if it's supposed to be all FDIC insured and this and that and the third, and these pension plans are supposed to be safe? You're contributing your money every month to these pensions in hopes that in 15, 20, 30 years, you'll have a pension plan that's going to be something comparable to inflation, comparable to the way of life that's going to be nice for you in the 10 to 15 years from now. Because 10 to 15 years from now, inflation is going to continue to go up. What costs $1 today is not going to be $1 15, 20 years from now. You know what I mean? Because right now, interest rates are so low, man, they giving money away. Okay? And you gotta be some assets. Remember, fam, this is entertainment purpose only. Try to take the test. You gotta be a good debt asset, and then of course you pay the thing off. And now that asset, which is gonna grow, and it's also gonna produce you passive income. You get your crib on a loan, lease it out. That loan is being paid for by your monthly lease, by your monthly rent. You got somebody there. Does that make sense? That's good debt. Rich dad, poor dad. Richard Kawasaki. You dig? So, family, am I buffering? I'm saying some fuzziness, but I think I'm good. All right? And so, pension plans, they lose money, family. They lose people's savings when they invest that money to increase the value of that money. Okay? Don't think these pension companies are just sitting on all that cash. A lot of the cash, a lot of the interest and dividends that are being earned on all these mutual funds, a lot of times those pension companies will want to make more money on that. And what do? They pretty much buy debt. Okay? They'll go buy a $50 million loan, right? And then for 10% interest or whatever, so they're going to get 10% every year on that $10 million or $50 million loan. But if that company defaults on the loan, then everybody that's a part of that pension is going to lose money. You dig? See how we're not really protected. You have to protect yourself. Please just don't depend on a pension or Social Security. It's not going to help you. It's not going to be sufficient. AZ, great point about the devaluation of the dollar. Yeah, but like AZ said, the price of gold has just skyrocketed. Like I said, last week, it was like $1,200 an ounce. It got up to $1,500 an ounce a couple of days ago. So that type of manipulation on something that's not even liquid, that you can't even go to the store and buy something with it. I mean, you can't get your lights turned on with gold. You can't pay for college with gold. Somebody has to buy that gold for it to even be valuable for you. So I think, yes, it's good to have some type of alternative hedging, some type of leverage. Meaning, if you feel comfortable with gold, do your research on that, right? But I think hard assets are more way to go. Real estate, okay, things that's going to make sure that when like this market crash, bam, then when the market crash, there are going to be some great opportunities out there for you to get some great dividend stocks. All right, and that's what I mean by taking advantage of the times. But don't just gamble. Do your research, and so pay yourself first, family. All right, family. The last thing, how banks make their money. Remember, family, banks have fractional reserve. So the $10,000 that you go deposit in that bank can lend that bank can lend $9,000 out before you even leave that bank. Okay, and so and that's them making more money on the $10,000 that you just deposited. So $9,000 they can lend out and charge mad interest on it, right? And that's how they make their money. But then don't give you but 0.03 or pennies on the dollars in a savings account. So why not go to a bank that's going to give you more money on your money? They're using it anyway. So you might as well have some type of protection. So also look at the CDs, certificates of deposits, the money market, okay, treasury bills, treasury notes, all right? Don't get yourself in a box, because a lot of times when you're paying yourself first, you're not spending that money. So why just have that money sitting, not making no money? Put it in treasury bills and treasury notes and some CDs if you know you're not going to use it anytime soon, all right? So, all right, family, being we're just going to be on for a couple of minutes. Like I said, tonight's Saturday. I'll be back, like I said, every weekday, 7:30, Monday through Friday. We'll be talking finance. We'll be talking the stock market. And I will be dropping other videos, of course, throughout the day. But I want to make sure that I establish this particular live as a live that's going to help us increase our financial education in a way that when the market does crash, or even when the market's in a great opportunity, we'll be able to benefit from it, okay? Because remember, when the market crashes, you'll be able to benefit from it. And what I mean by that, establishing some nice fixed index securities, where when the market crashes, your money's not going to be lost. So please look into your mutual funds, that your pension plans, like your 401k, your 403b, your 457. Find out what type of mutual fund that you're contributing, or that you're actually purchasing. Because if they're variable rates or the variable mutual funds, then it's like this. Make sure that you get some fixed indexes on your mutual funds, or something fixed, or something that's going to be growing over a long period of time. Because remember, if you get my age, a little older, a little younger, we don't have that many years to be working to afford a 40 to 50% drop in the market. You dig? So do your due diligence. It's nothing for you to call. You should be getting a statement every month. And it's nothing for you to call that fund manager to find out what is my money going to. That's right. So, family, we got a couple more things that need to pop off. Remember, all these diversions on the televised vision, only diversion to keep you from being able to establish this wealth. Okay, leave all this other nonsense alone. It's irrelevant. Yeah, I mean the market. I mean, we had 700-point plunges, 400-point plunges, but then the next day to go up 90 points, and people think that's cool. See, don't go by the color. Look at the numbers. You did? So, I'd like to say thanks for watching tonight. Make sure you like, share, and subscribe to videos. Join me Monday at 7:30, and we're going to get into some more food for thought. And make sure you join me in the garden. Being Willie is going to be out at 5,000. In the meantime, between time, may the Most High to bring you joy. And I'm out.